Good morning, more like good afternoon. It's 8 a.m. Monday, September 1st, Labor Day. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So I figured I'd give you guys a quick note here with some of the metals taking a move here higher. So September and platinum, why are they ripping higher specifically on a holiday? You do have some follow through buying from Friday where we accelerated higher, but it's really China. Both the official manufacturing and non-manufacturing PMIs edged higher in August. Higher manufacturing PMIs generally drive silver prices higher. It's the strong industrial activity that increases demand for silver in numerous applications. So remember, over 50% of silver's annual demand comes from industrial uses, which include electronics, solar panels, automotive parts, medical equipment. A higher manufacturing purchaser manager index, which indicates expansion in the manufacturing sector, signals a stronger global economy and increased factory output. So if you look here on Tuesday, tomorrow, we'll see global US manufacturing PMI for August come out. They're expecting it to continue to move higher here at about 53.3. The ISM manufacturing index, the consensus is 50. 50 is one of these bellwethers where it's you're either expanding or you're contracting. So you want to see that number continue to move up. So the S&P, that's another thing that I'm getting a lot of people that are kind of buzzing in my ear about because of the fact that September being this historically bearish type of environment here. Well, the S&P 500, we've had 20 all-time closing highs in 2025 with volatility staying below 20. That's kind of the key level because of the fact that you see the volatility index go above that 20 level, that's where mostly the day traders really start to get chopped up and they start to get frustrated and they start to move off of emotions rather than looking at things tactically and taking different positions or implementing different strategies as the volatility environment evolves. So while it is important in the fact that I'm going to acknowledge that you want to be historically aware, but what you don't want to be is just trapped within this historical environment here. Why? Because everything constantly changes. What I did 5 minutes ago is not what I'm going to do 5 minutes in the future, and it may not be what I do in that same time period here tomorrow. So all too many people, they become stuck or paralyzed by like these historical events by looking at charts or stats that are really no longer relevant. Many of the things that I look at are post-COVID because of the fact pre-COVID, you had so many different things that were happening. You had inflation at these lower levels. AI wasn't really a factor whatsoever. It was virtual and augmented reality at this point. So the dynamics of what's going on, not only within different companies, but also the economy have significantly changed. Now, what traders need to focus on and what I really look at is building a process without a bias whatsoever. I could easily, with the futures markets, go short silver as easy as I can go long silver. And you need this non-biased type of strategy that is driven by like a combination of technical analysis. That's why we do a chart pack. That's why I look at longer term charts here. I don't throw a lot of indicators on there. It's just really where's my line in the sand, and that's what I try and create. Additionally, I'll look at the rate of change within the current macroeconomic backdrop that we're in. Look at the Chinese PMI data. It accelerated. Chinese stocks are at 2-year highs and pushing up. That's going to drive things like silver a lot higher here, and it'll outweigh some of the bearish factors where there's really no demand whatsoever for coins or bars or physical investment in the precious metals markets. People are mostly adapting and looking at other types of derivatives in order to play on that. You also, again, want to look at the volatility within this trend because it's very important. If you look historically in the silver market, when we've broken through some of these key levels, that it's been an accelerating move higher here with short covering taking place, additional speculators rotating and coming into that market. A lot of the crypto money, besides in Ethereum, has really been sidelined, and that could start to flow into the market. You've got the equity markets with this concern about September being a downward market. They could be coming back into the precious metals, the silver market, and that's where you get these breakthrough moves significantly higher. Now, our year-end outlook, we are revising our target up from $42 to $44 on the silver market, anticipating that we see these higher prices coming ahead driven by speculative money coming into that market. Now, the problem with people who focus on this mean reversion or wanting something to repeat, when it doesn't go their way, they tend to get very angry with the markets here. So if September doesn't turn out to be a bearish bearish play whatsoever, and it continues to go higher. They get frustrated. I hear about it. They're trying to pick tops and things like that. So let me step back and say, fine, I'll entertain your September as always bearish, because why wouldn't it be? Since 1928, it's been down on average 1.1%. Now, does that mean at 12:01 last night I was supposed to get out or get short, and I'm not supposed to re-enter long until October 1st? What if I told you that if you bought the S&P 500 on September 26th and you sold it out on December 12th, well, it's been up 14 out of the last 15 years. And this is precisely what I tell you, that past performance is not indicative of future results. So that's enough on what's going on with the S&P 500 and people just being so bearish, because we've got a series of economic data that's going to be coming out today. You've got numerous Fed speakers coming out. On September 3rd, you've got St. Louis Fed president, who is an FOMC speaker, said that on August 14th that most of the impact from tariffs and inflation is expected to fade in 6 to 9 months. That sounds to me like someone who was hawkish is now starting to pivot to more dovish. Then you're going to have the JOLTS job openings, which are supposed to be unchanged. You'll have the Fed releasing their beige book here Thursday. This is where things start to get a little dicey in the markets, and maybe your bearish theme comes into play. Well, the ADP employment change is expected to be at plus 100,000. The consensus here, they're right around 80,000, and last was 104. So a downtick from previous, but higher than consensus. What that does to the market, we should see some movement here. You also have New York Fed President Williams, another FOMC voter, speaking in at his last engagement on August 27th, and that's what I tend to look at with these Fed speakers, especially the voters, the highlight of what the last conversation they had. And he said at some point it might be appropriate to move rates down. He noted that GDP growth has really slowed, and he expects that to continue to slow. That sounds like someone who's pivoting more dovish as well. You've got Chicago Fed President Goolsbee, who is another FOMC voter. A bit mixed dialogue on August 15th. And then the Super Bowl comes on Friday, where you're going to get the non-farm payroll employment. They're expecting plus 60,000. Consensus a little higher at 75,000. The last was 73,000. That's been what has really fueled the turnaround, with the Federal Reserve really pivoting dovish here. And then, of course, you're going to get the unemployment rate, which should get some traction here, ticking up to 4.3% from 4.2. I anticipate that it should end the year right around 4.4%. It's a rate of change on a lot of these different elements here, and the rate of change how Fed speakers are looking at becoming from hawkish to dovish. We'll also have some big events in September. We'll have the CPI data coming out. Expect a lot of hedging, zero DTE options being bought around that. Finally, your Fed meeting on September 16th and 17th, and that's where we anticipate that they'll cut 25 basis points, but it's the outlook going forward. So I want you guys to have a great Labor Day weekend. I'm off to go over to the beach, to the Gulf of Mexico, not America. I'm kidding with you. Gulf of America. I actually have a shirt that says Gulf of America. My wife bought it for me to remind me that it is now the Gulf of America and not Mexico. So the topwater fish, they are hitting here. I went out there with spoons, but they're really staying near the top. So you get this bubble that has it float behind. You put a treble hook, and then you get yourself that looks like a little straw here. And the fish, they just attack it left and right. So that's what I'll be using here today. But if you guys got any questions, shoot an email to info@bluelinefutures.com. I'm not really going to be paying attention to my phone whatsoever here today. And remember, futures and option trading, it does involve risk of loss. May not be suitable to all investors. Good luck, good trading, go get them.